Hello, everyone. Thanks for joining us for this event on Canada's Productivity Challenge. My name's Murad Hemmadi, and as you'll read there, I'm a reporter at The Logic. Welcome to our audience, including existing Logic subscribers, new readers, and people who I'm sure, about to become Logic subscribers. Let me tell you what The Logic is, if you don't already know. The Logic is an independent news publication that reports on Canadian business and technology, covering everything from EVs to crypto and AI and trade and a bunch of other stuff in between. In addition to our reporting and our daily newsletter, subscribers also get exclusive access to monthly insider events, community surveys, Slack channels, and job postings. I'd like to kick us off here by thanking Desjardins for sponsoring this quarterly series of events that we're doing um, on sort of where we are economically as a country. And to get us started, I'm going to kick this over to a man whose economic analysis I've been reading for a long time and I always find really insightful. Jimmy Jean, chief economist and strategist at Desjardins.
Thank you, Murad. And I just want to say it's an honor for me and for Desjardins to be participating with the Logic in this event. You guys never cease to amaze me with the sort of hard-hitting, very well thorough, researched journalism that you're putting out there. And certainly you've been able to show that in such a short period of time. So I want to commend the Logic for that and keep up the great work. Look, this is I'm going to be talking about productivity in the sense that, this is a topic that's been certainly beaten to death. So I don't want to bore you with statistics or things that have been thoroughly discussed, but maybe just bring attention to a few points as we think about this, and also we keep that ongoing conversation about how Canada is to pivot and how it is to deal with that trade crisis we're currently facing. So the first point I want to make is about the composition challenge. We often think of productivity in terms of individual firms not being productive enough, not being efficient enough, and that's certainly part of it. But another part of it is how our economy has been shifting away from the highest, the most productive sectors over the years in favor of lower productivity sectors. So if you take, for example, our goods producing sector overall, it tends to be more productive than private services. But if you look at the share of manufacturing, of mining, and of energy in our economy, it's been declining. So that's actually connected to the discussion about capital deepening, which is the lack of capital added per worker, because those sectors are very capital intensive. So if those sectors are shrinking, relatively speaking, it's no surprise then that we find ourselves with zero growth in non-residential investment in the last 5 years since 2019, compared to what you find in the US, which is growth of 18%. So pretty clearly we need to turn that around. And it's not just adding new machines or technology, but it's actually growing certain sectors that drive that productivity and that wealth. And the faster we do that, the better we can see that turning around. But here's the catch. I use the word build. We do need to build those sectors, and for that we need a very dynamic construction sector. Now, if you look at construction, it's actually one area where productivity tends to be low, but not just that, it's been declining and at an alarming pace to the tune of 10% since 2019, 10% less productive, in other words. So we know the reasons, there's a bunch of them, from regulatory hurdles to lack of technological adoption, or labor mobility issues. But I think the broad bottom line here is that, to fix Canada's productivity issues, we need to be focusing and reallocating that capital into those higher productivity, higher wealth sectors. But at the same time, we need to think very specifically about certain sectors that could constitute bottlenecks. And one of those sectors is the construction industry. The second thing I want to draw people's attention to is the importance of productivity for trade diversification. I think that's a very topical issue in these moments. And when it comes about trade diversification, governments have had this tendency to see it as sort of, huge trade missions there, brokering new trade deals. But really, the foundation of it is productivity. Is that Canadian firms need to actually be competitive if they want to succeed internationally. And the reality is that when you're penetrating new markets, it means that you're going to be facing very efficient, very powerful local incumbents. You're going to have countries or firms that find better economies of scale, that have better knowledge of that market. So almost by default, you're coming off with a disadvantage. So that makes it all the more important to have a very compelling offer when it comes to either the product differentiation you're bringing to the table, or the fact that you're able to do it on a much cheaper basis. And all that requires innovation and productivity. So I think the point here is that it's not just about productivity as a growth and wealth creation lever. That's a given, but it's also going to be our passport to those international markets that we crucially need more than ever. Final point I'll make is about defense spending, which is also very topical at a time when we need to reinforce our sovereignty. Now, higher defense spending, that's great when it comes to our security and all those things, but it's also an economic opportunity. And I'll point out to some research for the OECD that shows that a 10% increase in defense R&D leads 1 year later to a 5.6% increase in private sector R&D. And the study also finds a positive link to productivity growth. Look, if you think about defense R&D, there's the great example of the U.S. DARPA, the U.S. DARPA research program, which anything from drones to satellite technology to simulation technologies, and all those technologies, by the way, have dual use, meaning that they have spin-off potential in the private sector and coming from research, military research at the origin. So those are indeed innovations for which you're going to be able to spin off new firms that are going to be able to export throughout the world. Now, the key to that, however, and if we're going to be spending that, we estimate about 15% increase per year in defense spending if we want to reach that 2% of GDP target by the turn of the decade. The key to that is that it needs to be done deliberately. And it needs to be done in conjunction with growing the domestic industry. Otherwise, everything that's going to happen is that we're just going to be leaking those investments. They're going to, right now, the US is actually dominant in defense technology, and you have several very strong companies in Europe as well. So it speaks to the need to having that competitiveness element, that productivity element. Otherwise, it's going to become a wasted opportunity to also capitalize on those innovation accelerating effects that this research is suggesting. So, those are the 3 points I wanted to make. I think the general understanding right now is that people are focused, rightfully so, on their RSP statements, or maybe they shouldn't, but we're looking at what the market is doing in response to those tariffs announced last week. But when the dust settles, we're still going to be confronted with our longstanding challenges in Canada. But my point here is that more than ever, focusing intently on these will be key to determine how fast and how well we manage to pivot in the next coming years. And I'll leave it at that.
Thanks so much, Jimmy, and certainly a lot there that we've seen in our reporting, and we're going to continue to be reporting on. So before the three of us get to talking, I wanted to do a couple things. One, to tell you that there's a way for you to ask questions, and we want you to do that because we like talking to each other. But you folks have questions and ideas too, and we want to hear them. So questions that you have about our conversation, about economic things, about productivity things, insights that would be valuable in your day-to-day in business, please ask them in in the Q&A section. They'll filter up to us, and we'll ask them if you want to leak us stuff. I'll tell you how to do that at the end of the show. Don't do that in the chat, please. I will quickly introduce my colleagues, although I'm sure you are familiar with them already, and then just sort of set the scene a little. So joining me to talk through all of this are Kevin Carmichael, the Logic's economics columnist and editor at large, and Anita Balakrishnan, the Logic's reporter covering electric and autonomous vehicles, and the writer of our excellent Shift newsletter. I'm sure you're all reading them. If you're not, what are you doing? But so I want to take us back to a year ago when Carolyn Rogers, the deputy governor of the Bank of Canada, said that Canada is facing a productivity emergency. And those are two interesting words because one sort of puts you to sleep and the other one wakes you up. Um, uh, and that's kind of the problem with this, sometimes the problem with this conversation. So we're going to keep it lively today. At the time that she gave this speech, labor productivity had fallen for 6 of the previous 7 quarters. And one major contributing factor that she identified was the business capital spending, so that's investment in machinery, equipment, and intellectual property in Canada, was lagging the sort of economies we like to compare ourselves to. I'd add from the reporting that I've done over the years, business spending on R&D is another metric on which we tend to trail. So why am I talking about something that happened a year ago? It's because not a lot has necessarily changed on the productivity front since that moment, which she described as kind of a break glass moment. But one very big thing has changed that makes it even more important that we do something about these problems. And Jimmy alluded to that. It's hard to ignore it if you've looked at your investment statement recently, which I do not advise you do. You have seen it, and I'm talking about, of course, Trump and tariffs. I want to start with some basics to set the field a little bit. Kevin, why does productivity matter, and why are we doing a whole series about it?
Why does it matter? I mean, Jimmy just laid out pretty concisely or nicely why it matters. I'll take a stab. I mean, it matters for growth, right? And I think we're having an election about growth, though perhaps the politicians don't talk about it in that way. But I think we've realized that our paths for growth for the past number of decades are been narrowed, if not closed. So how do you achieve growth? Well, you achieve growth through maximizing your resources. We have lots of those. That's been a path to growth for Canada for a long, long time, from the beginning, frankly. You can pile in people into your economy. We've been pretty good at that in Canada too. But both those paths have limits. And, obviously we can't dig everything out of the ground. So we've got to think about ways to not entirely lash ourselves to the resource sector. And we've, of course, come up against the limits of immigration. We saw that we don't have the capacity to absorb vast amounts of people all at once. Explains a lot of the problems we're having right now. So what do you do when you run out of those two paths to growth, or when those two paths to growth are cut off for you? You have to try to take better advantage of what you have, get more out of the people that we've crowded into an economy, get more out of the resource wealth that we have. And so that's why productivity matters. And that's also why we're doing this series now. I mean, there's a new urgency. And Jimmy's absolutely right. I mean, this is something that has been beaten to death on the op-ed pages and the business sections and the think tanks over about as long as I've been doing this work, so the better part of 3 decades now. And after we published that first story this week, I mean, I got some more emails, kind of eye rolls, basically, right? Oh, here we go again, a productivity series. But it's different, and I'll underline that point and then kick it back to you guys. But the reason it's different is because the context has totally changed. So yes, we've been talking about productivity a long, long time. Nothing really changes. Nobody really wants to talk about it. But we need to talk about it now. And you set it up nicely, Murad. Productivity is a terrible word. Nobody wants to talk about productivity. But emergencies get people's attention. And we've got one of those right now. And I think it's opened a huge window to do lots of things that we just haven't been able to do for all kinds of reasons for a long time in this country.
Yeah, and I think we'll talk, we'll talk about the ebbs and flows of this a little bit because I think it is interesting to note these moments at which, government policy has seemingly started down the path of responding to something, to the productivity issue, and then gotten distracted by something else. But I want to flip from the macro to the micro for a second because I think it tells us a little bit about where we are. The shock we were all alluding to is, of course, Trump. Um, and Canadian politicians have observed that the policy of the US administration seems to be to try to suck as much investment as possible out of the rest of the world into the US. In the meantime, these tariffs are disrupting the supply chains that have received investment and have already been set up. So, this is all a long preamble to say, Anita, you've been watching the effect of the tariffs and this sort of disrupted investment environment in the auto sector. What are you seeing on the ground in terms of how these changes happening in the US are affecting Canada's auto sector?
Yeah, lots to unpack there. I think Jimmy set it up really well, obviously talking about the importance of goods production in the overall economy and how that has kind of diminished as a share of the economy over time. And anecdotally, there's no reason that that should be the case. Two of the most productive auto plants in the world are in Canada. Toyota's auto plant and Honda's auto plant are consistently ranked some of the highest quality in the world, and Toyota is, one of the most productive companies in the world. So we certainly have the talent and the wherewithal to kind of create these types of investments, and the question is, why is that not happening now? So I think that the reason that these tariffs, one of many reasons these tariffs are going to create a challenge from the productivity side of things is because there is a certain level of scale that is needed in the manufacturing sector to create productivity and improve productivity. And nationalism is a big challenge for that, for Canada, because we are already sort of, having a small domestic market, and we don't have something like the EU to fall back on. So being cut off from the US market is going to add another set of challenges to a sector that is already kind of swimming against the tide. And so there are companies that are doing some very interesting things and are raising some very interesting alarm bells around that. And I'm sure we'll get into that as we go on. But that's kind of the starting point where we're at, where we have the talent here, we have the possibility here, but there's some challenges in our way.
Yeah, and this is interesting in part because I think that ends up being, you know, we've all watched over the last couple of years in particular, I'd say since the pandemic, this revival of sort of industrial policy across across advanced economies, right? And so, what do I mean by industrial policy? Essentially, governments targeting policy and programming around specific sectors that they're trying to encourage. Cynics would argue this is what the Canadian government's always done, except the sectors have been different. But in this particular case, we're talking about, Anita's been covering the growth of the EV sector, or the sort of creation of a Canadian EV sector. I've covered some of this in semiconductors. The government would argue AI is one of these things. One of the things that I'm interested in, and maybe I'll throw to you, Kevin, on this, is like the idea that by sort of picking those places, making those bets, government thought like we'll accelerate the top. We'll get these sectors working again, and then we can figure out the rest that comes behind, and that bet seems to have taken like one Trump re-election to completely blow up those bets, not just in the auto sector, but kind of across the economy.
Yeah, and Murad, I'm going to set you up for a question because I'm actually happen to be very curious about what you think. But you've been sort of watching from day one of the, I'll call it a subtle shift back towards an industrial policy in Canada with the super clusters and all of that. I wanted to hear from you your impressions of whether that's worked at all or might be working slowly and we just need to be more patient. But to your point, I'll give you some time to think about that question that I have. I mean, yes, I think look, my observation is, and I'll sort of start to give a answer to the question I just put to you. My observation is that the Trudeau government came in at a time where there was this sort of shift in thinking and getting away from, I'll just use balanced budgets as a catch-all for that sort of approach to government policymaking at the federal level for the better part of 2 decades and even a bit longer. There was a real aversion to do that, even though, as you say, Murad, there was obviously, we always sort of did it on the margins. We maybe just talked about it less for a while. But the Trudeau government came in at a time where there was a real thinking that, you know what, we've been wasting an opportunity here by not taking advantage of the zero interest rates to plow a bunch of money into investment and set ourselves up for this new future that we could see through AI, technology, innovation, what have you. So you saw the government do that. And something else I think we should probably bring Anita in on too is that the thing that really seemed to grab hold is the idea of making Canada part of the EV supply chain again. We were going to be this great node in the production of automobiles at a moment when we thought the automobile industry was effectively dead, right? So suddenly it's back to life. But all this was premised on a story that involved us working well with the United States. Maybe some other countries, but primarily the United States. We're seeing day to day that the Trump administration has crushed that story. But that story already started to shift under Biden, I think, right? Because where the Trudeau government, I find, really kind of had the rug pulled out from under it was with the IRA, because we had convinced ourselves that we had this built-in advantage when it came to sort of the green transition, and the Americans were running so far behind on accepting climate change and putting productive policy in place to do something about that had become, we were telling ourselves, something of an advantage. And then the Biden administration, to the surprise, I think, if I recall correctly, Anita, correct me if I'm wrong, but to the surprise of almost everyone, put together a massive industrial policy around that idea through all sorts of subsidy into the U.S. economy, making it very hard for Canada to compete. So suddenly the Trudeau government had to scramble and try to catch up. And I feel like we've been scrambling ever since. And of course, the Trump came along. That door was open, but he's taken it a long way down the track to the point that you have to wonder how Canada competes on the ground of being this sort of adjacent economy to the US, a sort of special access and that sort of thing. I really think, this again, it gets back to what we started talking about on the top, why productivity is so important. This sort of built-in advantage that we've had for a long time and probably started to take for granted just isn't available to us anymore. So we have to start to think about other things. But I'm interested about what both you guys have to say about these ideas. I might be wrong, but and if I am, do tell me. But what do you think?
Murad, do you want to go in on the superclusters first, or do we
Yes,
want to talk about the IRA first?
I'll try not to lead with my elbows. I think so. This history is sort of interesting, I think, because the superclusters have become sort of almost a punchline for the government's innovation strategy, and I don't want to pick on them because, like, you can. People can read our reporting, but I also think we've sort of moved past that moment. I think where it's interesting is as a chronology. So, the idea of picking a few specific sectors that could do with close attention and some amount of financial support. And remember, when we talk about the superclusters, the first amount of money in that program was $1 billion, call it $1 billion. It was 925, I think, in the end. Split between 5 institutions. So that was a lot of money in 2015 to 2019, I'd say. And then 2020 and the pandemic came along, and it became like that is like a 15th of a battery plant, So like that, just as a sense of how much the scale has changed of these things. I think there have been various iterations of this idea of like Canadian areas of strength over time, and they haven't all come from the same place. So Jimmy referenced DARPA, and for a little while, the going idea in Canadian sort of innovation policy was we needed a Canadian DARPA, CARPA, most people called it at the time, which would, rather than having defense as its end goal, like creating things for the defense industry or the defense sector that could then have spin-off benefits. There were a bunch of different ideas about what it could do, but even that had this idea of Canadian specialization or strength. So climate was definitely one of them. Agriculture, like resources, AI always comes up. Which is all to say, like various iterations of innovation and economic industrial policy over like the lifetime of this government, even when they weren't explicitly talking about it in these terms. Like before Maria Mazzucato, who's like a professor in London who made a huge sort of who became kind of an icon of this industrial policy revival. Even before she got big, there had been these ideas of picking specialized sectors and backing them. To your point, EVs were not, in fact, one of them, and I'll throw this to Anita to talk about that integration. But I think two quick points here. One, I do think that part of that was always predicated on what we could sell to the world and primarily the US. Like if you look at the sectors that those things were in, some of them were purely digital, so like software, and software companies always sell to the US first because it's a bigger market and it's right there and it's right across the border and there's no language barrier. It's a very easy place to sell software into compared to like going to Europe or trying to get anyone in the Canadian market to adopt software, to be honest. Like tech adoption is our perennial problem. But two, even when Canadian governments have tried to diversify both sectors and places, the gravity of the US is so significant that you just end up pulled there. So we did a story a little while ago before Trump was reelected about in Trump 1.0, the government set this target of growing foreign exports, so overseas exports outside of the US by 50% by 2025. It was the diversification strategy, essentially, when Trump was trying to get NAFTA renegotiated. And so the idea was if we grow our exports everywhere else, then we'll reduce our dependency on the US. Well, guess what? We did both. Canada's on track to meet that 50% target, and the percentage of trade going to the US has actually increased over that period of time. It hasn't increased by leaps and bounds, but it's increased by like a couple of percentage points. So like we can push as hard as we want outside of the US, and we'll still end up drawn closer to the US. Is my point. And EVs auto might be the perfect example of this. So yeah, Anita, to sort of ask Kevin's question, what happens to an EV sector, that doesn't necessarily have the US right there?
Yeah, so I mean, we did all of this work to friendshore and bring manufacturing back to North America, which was great when we had this North America coordinated strategy under the USMCA. But Canada has, I think, struggled in the execution. And we've heard this a couple of times. So people who were at the summit, the Logic Summit last year, heard from SheerTex, who's a manufacturer, not an auto manufacturer, but kind of talking about what Jimmy alluded to in his opening remarks, that she's trying to raise investment for this new factory. She goes to Hydro-Quebec. Hydro-Quebec says, how big is your factory going to be? Then we'll give you a quote and a permit for your energy. She goes to her investors. The investors say, well, how much is your energy going to cost? She goes back to Hydro-Quebec. Hydro-Quebec says, well, we can't give you that. And so, you get in this Scooby-Doo situation where you're running out to all these different doors and they all are in a giant circle. And then in General Motors, we hear the same thing. They're trying to connect Canada's mining sector to the auto sector, which is this big no-brainer that the government has been going for, saying we have all of these, world capital of mining financial services. We have the only jurisdiction in North America with 5 auto manufacturers. Like, who could do this better than us? But the construction industry in Quebec is so overwhelmed and overloaded that there's delays. They can't get these factories built. And meanwhile, the same companies in Korea are churning out this factory in a matter of months. And so there is definitely sort of a, I think, red tape issue going on that where our bureaucratic infrastructure is not keeping up with our physical infrastructure needs. And so this is obviously even more complicated by the tariffs because, you know, these plants need a certain scale to operate, and if they're not selling to the U.S. market, it's very difficult to sell some of these things cross-border. We do have companies like Martin Rea, who's an auto parts maker, doing a lot of work using AI in their supply chain, sort of reimagining their like physical assembly lines so that they can be operated at half capacity and flexed up and down instead of having sort of the I Love Lucy situation of things piling up. So there are innovations happening to try and deal with all of this uncertainty of not knowing when your supplier is going to be available or when your customer is going to need things. But you know, there's also other auto parts companies like Magna that are just saying, well, we don't have the capital right now to put into this sort of black hole of a sector, and we're just going to pull back on this innovation spending, which is the opposite of what we want long term from a productivity perspective. So there's certainly a lot of pressure on the industry already, and it's going to be made a lot harder by being cut off from, you know, this huge industrial market of the U.S.
Yeah, I'm gonna shift into moderator role for a second, but because we've got some great questions here, and skip over the joke about you can't eat auto parts the way that you would the chocolates coming down the line and I Love Lucy. Um, David McFarlane asked this question that I want to put to Anita because it kind of jumps off what you were talking about with the supply chain part of it. Is it possible to shift the conversation around productivity to, quote, adding value? Could efficiency be pulled by the drive to add value to our resources, labor, capital, technology, natural? I'm thinking personally about critical minerals and the supply chain there. If we have to renegotiate Kuzma, can we do so with a view to retaining value in Canada rather than exporting resources?
Yeah, so I think one of the big challenges in the resource extraction sector has been that, and our colleague Jesse Snyder in Calgary could speak more to this as well, but value can be created in the resource sector without doing anything differently, just by the value of the commodity going up or down. And this has become like a huge issue in the mining sector over the past few years, in that China has a lot of pricing power because they have such a high volume. So kind of we have this situation where sort of regardless of what some of the mining companies do, they may see their prices go down. And that makes it difficult to raise funding. And that was kind of our big value add proposition, was that we had all of these financial and legal services here in Canada in the same place where you have a lot of critical mineral deposits. So that is an add value in theory. But in actuality, what we have is this situation where the patent filings in the mining sector have been declining in Canada, because it's sort of, where is the incentive to invest in innovation when your product's pricing is all to do with things out of your hands. So this is something I think that is going on all over the world, but maybe requires a rethinking, as the questioner said, of how we think about value add and the kind of time scale that we think of for the mining sector, which is a very long-term industry and requires kind of like sustained financing to do things like that are actually innovative. And right now, we don't have that kind of infrastructure set up where we're willing to see a sector take a loss for many, many years on the TSX and just wait for it to pan out, which is what somewhere like China has been doing. So that's
And
kind of what they're up against.
and is part of the argument about our tech sector too, right? Why
Can I
can't we
jump in
grow?
on that one, Murad? I have a thought, maybe
Mhm.
two thoughts. I'll try to get them out quickly because there's a lot of great questions, as you say, piling up. I think we absolutely have to finally pivot toward creating some value in manufacturing. I think it gets back to what we were talking about, the complacency that comes from being next to the US. The math just didn't ultimately make sense, I think, for too many investors when you could just ship the raw good across the border and take advantage of that scale. Like, it just wasn't there. But that's kind of the advantage, if you want to look for silver linings, about the tariff wall that Trump's putting up, and the chaos and the uncertainty suddenly becomes the math changes, and it becomes more interesting to actually try to add some value to all those resources here in Canada. So I think that's going to change things. And I think, though, of course, at the same time, policy is absolutely going to have to lean into that, just to push the investors along just a little bit more. I don't know that the math is going to quite, like, I don't know if the tariff math quite makes that a value proposition, but some useful tax incentives certainly might. And then the third thing is just policy uncertainty, is the other thing, and there's just been so little of that. Tariffs are only one example. There are canola oilseed crushing plants on hold in the West because nobody has an idea of what Canada's carbon policy is anymore, right? The carbon taxing policy anymore. So we just have to get some of this political risk out of the way, get some policy that's going to amplify what I think is probably the reality on the ground, is that, it's time to start producing more stuff that the world actually wants, and that, that offsets, the tariffs to a certain way, and people will pay more for something that they think they need or want. Right now, we've got too much stuff that you can go find anywhere else, making the tariffs a really big problem.
Yeah, growing up as a business reporter is realizing that vibes actually matter. It's kind of wild. Actually, Kevin, I want to stick with you and ask you the flip side of that question, and modifying a little bit what Chase Knight asked us. The first question we got, and thank you for being first, Chase. That's always useful to us. So the question is: within the U.S., the growth of the previous years has most definitely outstripped Canada, along with the rest of the world. However, the government has also run a massive budget deficit in the US to do so. Within Canada, our deficit is focused on different areas. Rather than business investment, we focused on a lot of individual investments, healthcare programs, and so on. Is by default it a necessity to be running a deficit from the government side? And are businesses not investing enough in their own quote productivity growth? And I'll just tack onto that as a framing device. Um, I've said this a few times now. I covered policy in Ottawa for 7 years, and every year, various business stakeholders would come up with a list of things that they wanted from the government. And the implicit promise was always, if you give us these things, we will invest more. And the government, like, you can quibble with their execution and how many of the things on the list they checked off. I don't think you can argue that they never put up anything that was on the list, and the numbers just will not move. So, how much of this is like businesses need to get off their butts?
Um, this is where we start to lose subscribers if I lean into this too hard, Murad. So no offense to anyone out there, but we do need to. But it's not necessarily because we've got a bunch of entrepreneurs sitting around who are, to borrow some of the old phrases, lazy or complacent. I don't know that entrepreneurs are either of those things, but they're very responsive to incentives. And I think, and we'll get into this in the series toward the end. So if people don't like what I'm about to say, please send me emails or get in touch and tell me why I'm wrong. But we've got a serious incentive problem in Canada on a two or three different levels. And one is, I sort of frame it as demographics, and it works in two ways. We've got some of the most important industries in the country are at a level of development where they become sort of mature industries, and in too many cases oligopolies. So they have a different incentive structure than, say, a fast-growing AI company like the ones that you cover, Murad. So once you're at that level, you just don't have, you're not pushed in the same way to invest heavily like you are when you're growing. And then another part of that demographic question is that we've got a disproportionate amount of smaller companies, small, mid-sized companies in Canada, who were investing 30 years ago and growing and becoming the backbone of the economy, like we so often say. But now those owners are 50, 60, approaching a retirement age. They don't have an incentive structure to invest heavily because why would you if you don't have a clear path to growth? You're sitting on your retirement. You don't want to, bet the farm on that. So you don't. Um, so so yes, business does need to get off its butt, to use your phrase, Murad, but at the same time, policy has to be responsive to the incentives at play and do some things to alter those incentives. And that's sort of gets us back to the deficit question. I mean, it'd be great if we could go back to the balanced budget era. It'd be nice if all this would work out in a way that we weren't running up more debt. But I just don't see another way around it right now. There's just too much that needs to be done to think that you can do that without leaning into it with some government spending. But the last thing I'll say there is it's something that we shouldn't, it's an advantage. Believe it or not, it's an advantage that Canada still retains, and it's not advantage sort of in the global market that we should throw away just to go all in on some wild bets. It's something that we want to keep some limits in place. But yes, we need to continue to run deficits, I think. But those deficits need to be directed toward things that are actually going to, enhance productivity, which hasn't necessarily been the case. I think all three of us would agree for the last little while.
Murad, there's a lot of questions in the chat about kind of the disconnect between, job creation and, worker wealth and increased productivity. And I feel like implicit in that is kind of this implication that some of this will be gained through automation or through big tech rather than through, I don't know, other means. So I wonder if there's a conversation to be had from what you're hearing from entrepreneurs about how automation will and will not address some of these issues.
Yeah, and I'm going to wrap into this. We've had a few questions about public sector productivity as well, and I think these are they're not quite the same thing, but there's a continuum. So I'll start with what Anita was asking about automation. I mean, look, a sort of simple definition of productivity is output per worker. You can change either side of that equation, and you get a bigger number. And so, I think one questioner asked about sort of reducing labor or job reduction. That is one form of it. You could also increase output. I think the argument that you see from sort of um, people who think of this in the sweep of sort of industrial change is that yes, individual job functions are often lost as a consequence of automation, um, but overall employment tends not to be. Now, that's not necessarily deeply comforting to people because um, while overall the economy might not lose employment and overall a lot of people might have their jobs changed rather than eliminated, it is inevitable that there will be some people who will lose their jobs, and that some of those people will not be in a position either demographically, based on how old they are, where they live, and so on, to simply retrain for one of these new jobs. The reality is, and I say this with no sort of judgment of either of these career choices, that the average factory worker is not going to turn into an AI developer, right? That or at least not with a lot of training and sort of effort from somebody, and it's not going to be the companies putting those people out of jobs. So this is a well-grounded fear, but I'd say two things to that. One, the pace of technology adoption generally, and in Canada specifically, is never really as fast as you think it is. We've seen a lot of talk about AI and white collar work, and this is one of the great ironies. Someone's going to correct me on my use of it. The great sort of puzzles of all this stuff is like A few years ago, we ran this series. Finance had done some calculations about the most automatable cities, the countries with the cities, the places in Canada that had the largest share of the population that were likely to be put out of work by automation. And the place that they picked was a place, or that their math picked was a place called Brooks, Alberta, which has 2 giant meatpacking plants. Now, meatpacking is awful work. I don't think anyone hides that. It's dangerous. It's exhausting. It is work that is done by people who often have no other choices. And the idea was that that's a clear target for robotics. It turns out the generative AI moment flipped that on its head, where it was people who do the stuff that you and I and Kevin do, knowledge work that was supposed to be most automatable. And yet, we are still in a phase where people are talking about the difficulties of getting AI at scale across organizations. And when they do, they're often having to keep humans in the process in order to ensure that whatever they're producing, whether that's written work or answers to people, is as good as people expect it to be. So that train will take longer than people think, and I think that's where policy has to come in around training, around reskilling, and so on. I'll just quickly take the question on the public sector side. Now, quoting former governors of the Bank of Canada has turned out to be a risk because you never know when they're going to run for political office these days. But I'm going to quote the last governor, Stephen Pullos, who's been saying recently that one of the problems that the Canadian economy has is this crowding out effect. That because so much employment growth has been in the public sector, and remember, public sector doesn't just mean government employees. We also mean people in healthcare and education and people who do things that we want more of in the country, generally speaking. That this crowds out the opportunity for productivity growth because people aren't really measuring the productivity of the public sector when they consider our productivity growth. And so that needs to rebalance if we are to see that number improve. But in healthcare and in education, there are opportunities for productivity growth with AI. There's no doubt the country needs a lot more doctors and doctors and nurses. And it would probably be a good thing if we could allow some of the people who already have those skills, who immigrated here, to do those jobs. But undoubtedly, some of that help will come through automation. Anyway, it's a very long answer. We have to get out of here, so I wanted to ask you each a last question just to kind of set our scene. I'm going to go to Anita first, and then to Kevin. Anita, you obviously, your day-to-day is writing about the auto sector, but you have a lot of interest and see a lot of the economy outside of that in your work. What are you, in the sort of next 6 months, are there leading indicators that you're looking for that would give us a sense of, whether, as you were describing it, this sort of changeover and productivity is going to happen, and you're going to see those plants, or whether the sector can't recover from this Trump tariff attack?
I'm going to say something that's maybe not necessarily manufacturing focused, although it is inspired by conversations with people in manufacturing, obviously. Something that I'm keeping a close eye on, I think, is the conversation around like inclusivity and gender in the workplace. There seems to be this big conversation going on amongst the younger generation around, returning to traditional gender roles. When we're talking about economies of scale, obviously childcare is an economy of scale, and taking skilled workers out of the workforce is not, a recipe for growth unless they don't want to be there. So that's an interesting conversation that I think I'm going to be keeping a very close eye on, and that I'm very concerned is a lagging indicator. I think beyond that, we are seeing this kind of dot-com moment in the auto sector, where some of the easy money that has supported some of the startups, like through the SPAC boom and meme stocks, is dissipating. And so there is probably going to be pressure to consolidate in the manufacturing sector. And I think we're going to see some potential big deals ahead. And the question is who's going to come out on top there. And that could determine a lot of sort of where the economy goes from here. So those are two things I'm going to be keeping a very close eye on.
And Kevin, I'm going to let Kevin Lynch ask you the last question because I think that's probably a good policy in all of our lives. Kevin Lynch, who dealt with these issues as clerk. I'm assuming it's the same Kevin Lynch. In your personal interaction with politicians at the provincial and federal levels, can I assume that they understand we have a productivity crisis? And if so, why do they not talk about it more?
Yeah, I'm not sure it's the same Kevin Lynch because I have a conversation on and off about productivity with another Kevin Lynch who's not the one that not the famous one, shall we say, Murad, but whichever Kevin Lynch has asked us a question, I'll take it. Are politicians aware? Yes, if only because they read the logic, like many others. My sense is that they still are afraid or haven't figured out how to wrap a compelling political message around that. And you can see that in this campaign, right? I mean, it's evident to everyone that this is really when it comes to policy, at least, it's a productivity election ultimately. But no politician frames it that way, which is why I think that we need to get back, or sort of takes us right back to the beginning, where we need to find a better story to make those policies stick. And I think clearly we have one now. I think people clearly, when things are just kind of normal, people think first about their own stuff. Now that we've entered into an existential moment, let's face it, that's what we're in now. I think it presents an opportunity for people to see that, okay, look, there's something maybe a little more important than what's going on just with me at home. And I think that you can sort of wrap a story around that to say, we need to zero in on productivity. We might, to your point, Murad, we might not want to call it productivity, which is why, I like what Frances Donald, the chief economist at RBC, her approach to talking about it, which is to think about it as part of Canada's economic immune system. And we can see right now every day why we need to boost our immune system, and you do that by figuring out a way to ramp up economic growth.
Well, I think if folks are looking for a better story, at least a more understandable story, they'll know where to look very shortly, because we're going to continue rolling out this productivity series under Kevin's expert guidance. Thank you all so much for being here and all your questions. Honestly, it is. I'm sorry we couldn't get to all of them, but it is great to have so much engagement, and particularly on a topic that is both important and sometimes difficult for people to get into. That's kind of what we specialize in around here, trying to make those things a little more understandable for everyone. So thank you to our sponsor, Desjardins, and to Jimmy Jean for setting up this conversation. As you heard, it certainly gave us a lot to work with. Thank you to our audience for joining us today. If you're not already a subscriber, you can find a link to subscribe in the chat or visit the Logic's website. Now would be a really good time to do that, because, as I say, productivity is going to be something we're covering in close detail, but in an engaging and interesting way in the weeks to come. Stay tuned for upcoming events. We do a lot of this kind of thing. They're always fun. Thank you to everyone who joined us today, to our panelists, to Kevin and Anita for hanging with me through all of this. It's always fun to talk to you, to our sponsors, and to the team behind the scenes that makes all of this work. You can find The Logic on X, LinkedIn, Facebook, Instagram. I think we're on Blue Sky now. Have a great day.